Hello friends, welcome back. Pankaj Daga this side, your knowledge buddy. We wish you Merry Christmas to all our viewers and thank you for your support on part 1 of this series. For those who are yet to see that, we have provided a link of that video in comment section. Today is 25th December and we will begin our journey of exploring few lesser known tax laws and provisions in order to make our tax planning smarter. In last video, we saw similar conditions for section 80C and now we will begin with section 80D, which is for health insurance premium. For financial year 2018-19, exemptions limit under this section were also enhanced for senior citizen to 50,000 rupees from earlier limit of 25,000. As you can see, if you have paid health insurance premium for yourself and family, you can claim 25,000 as deductions. This deduction limits also includes 5,000 towards preventive health checkups done for you and your family. Let's understand this with two examples. Say your health insurance premium is 16,000 rupees per annum and you also have done some health checkup during that year which costed you 5,000. Then you may claim deductions of 16,000 plus 5,000 resulting 21,000 as a overall deduction. However, if your premium is say 23,000 and cost of health checkup is 5,000, then maximum deduction you may claim is 25,000 only. If you are paying health insurance premium for you and your parents in two separate policies and none of them is aged above 60 years, then one can claim deduction of total 50,000, that is 25,000 for each policy. This deduction will increase to 75,000 if parents are senior citizen, whereby one is entitled to claim 50,000 deduction for making health insurance premium payment towards senior citizen. If you and your parents both fall under category of senior citizen, then such limit of deduction will be 1 lakh rupees. Note, all above mentioned limits include preventive health checkup of 5,000 in it. Now let's analyze section 80E, which is for interest payment on education loan. We have decoded details for easy understanding. Under this section, one can claim deduction on interest paid on education loan for self, spouse or children. These deduction has no upper limits. However, it has only one caveat that loan must be taken for any course or education which is to be done post passing 12th or equivalent from recognized universities or institutes. Also note that this benefit can be claimed by individual taxpayers only and not by HUFs. Principal repayment on education loan can be exempted under section 80C within the overall umbrella of limit 1.5 lakh. One should also note to claim that benefit under section 80E, loan must be taken on the name of taxpayer and such deduction can continue either for 8 years from the interest repayment date or till the time interest is fully repaid, whichever is earlier. We will now analyze very interesting section of 80TTA and B. This section deals with interest earned on balances of saving like savings bank account, which also includes cooperative bank saving accounts and saving schemes of post office. Maximum limit of deduction is capped at 10,000 rupees for all individuals other than senior citizens and above. For them, new section of 80TTB got introduced in financial year 2018-19, which we will discuss in while. Individuals and HUFs both can claim these deductions. However, note that interest earned on only saving accounts will attract exemptions. Interest earned on deposits like FDs, RDs, or fixed deposit of post office, which are known as time deposits, continues to attract TDS at the rate of 10% on interest earned above 10,000 rupees in any fiscal. To claim benefit under Section TTA, one may club interest earned on multiple savings bank account and should capture it as income from other sources in ITR. Note that this deduction of 10,000 is over and above the limit of Section 80C. For senior citizen and above, new section of 80TTB got introduced whereby they can claim exemptions till 50,000 rupees from earlier set limit of 10,000. Rest all details remain same as per section TTA. Now let's move to another widely known section that deals with interest paid on home loan, that is section 24. Before jumping onto technicals, let's first understand difference of self-occupied and rented property. As a layman, if a house is occupied by self, spouse, dependent children or parents, or it is kept vacant, then it is called as a self-occupied property. Otherwise, it is treated as a rented property. One can claim maximum deduction of 2 lakhs paid towards interest repayment if property is self-occupied. In case it is rented out, then there is no upper limit on interest. Kindly note, only loans taken to buy new house or construction gets qualified for such deductions, whereby either possession or a construction should be completed before the end of 5 years from the year in which loan was taken. If construction or a possession gets passed on post completion of 5 years or loan is availed for any repair works, then such an exemption limit gets capped at 30,000 only. One can choose to club loan processing fees to enjoy overall benefit as mentioned earlier. No deductions are allowed for property under construction, and one can claim for interest paid during construction period in 5 equal installments post completion of the construction. However, the good news is that one can claim benefit under this section even if you avail loan from your friends or family. Condition is only that you should submit interest certificate carrying name, address and PAN details of the lender. Now let's move to a section which rewards individuals doing noble task of donations for a right cause. All taxpayer, that is individuals, HUFs, can claim deductions towards donations that they make under section 80G. Based on the nature of institute to which donations are made, it gets qualified for either 100% or 50% of total donations made. In few instances, based on the nature of institute to which donations were made, it gets capped to 10% of adjusted gross total income. Friends, adjusted gross total income is a gross income minus all eligible deductions except deductions under currently discussed section. From financial year 2017 and 18, that is last fiscal, donations made in cash over 2000 rupees will not be recognized as exemptions. Also, in-kind donations like food, clothes does not get qualified for deductions. Friends, donations has much larger motive than just to attract tax benefits. However, it should not be dependent on exemptions. It is a noble cause, and we at the L&D show takes this opportunity to salute all philanthropists who put social cause over and above their personal luxuries. Let us now understand a section which is not known to many, that is section 80GG, which attract deductions towards rent paid. However, first understand eligibility criteria. One who intends to claim benefit should not have house property at the place of employment and should not claim any other benefit under self occupied property from any other section discussed earlier. This section is beneficial to professionals who does not get HRA in their salaries as a component. Maximum benefit limits under this section is 60,000 or 25,000 of adjusted gross total income or total rent paid minus 10% of adjusted gross total income, whichever is lower. Friends, topic of tax planning is a vast and very dynamic. Covering all sections will lengthen the content. Thus, we have touched upon briefly on few sections which might be helpful to some of us. Like section 80DD, which is for treatment of handicap dependent, which includes parents, spouse, children, or siblings. One can claim treatment expenditure up to 75,000 basis on actuals. This can go as high as up to 1.25 lakh for severe conditions. Section 80DDB, which is towards treatment of certain diseases like neurological disorders, AIDS, or malignant cancer of self and dependent. One can claim benefit of 40,000 under mentioned section. For senior citizen, this limit gets enhanced up to 1 lakh rupees. Like benefit of section 80D, if assessee himself is suffering due to any disability, he can claim 75,000 under section 80U. For any severe disability, he is entitled to get 1.25 lakhs as an exemption on treatment expenditure based on actuals. We thank you for watching this video. If you like the information provided, please do share it with your friends and families by posting this video on your Facebook and LinkedIn page. Do subscribe to our channel and hit the like and bell button to get regular updates. Have a great day ahead, friends.